Americans got some mixed messaging Friday from the latest Consumer Price Index report. U.S. inflation increasing to 3.3% in March because of rising energy prices. Joining us now with more on the numbers, Justin Farmer, founding partner and CEO of Exit Wealth Advisors. Justin, thanks for joining us today.
Always good to see you, Robert. Thank you.
So let's go ahead and start with the war in Iran, because this is the reason for the increased oil and gas prices we're seeing. Do you see any change of gas prices, any chance rather of gas prices going down without a peace deal of some kind?
I think, Robert, that's probably unlikely. I mean, it's a commodity, so it can move up and down incrementally, but we're not going to get the significant drop that we all want. I mean, we're all feeling the pain at the pump. Even though the United States oil, any of the oil that we buy and use, we're mostly energy independent in this country, thankfully. But because it's a global commodity, we're still a victim, if you will, of the surge in the price of oil globally. A fifth of the oil supply moves to the Strait of Hormuz. And so we are all feeling the pain at the pump. In fact, about an 11% increase in the overall gas and energy prices around the globe. Nationally in the United States, our average price per gallon is up $1.18 a gallon, so up over $4 on average nationally since late February.
Yeah, that's a huge difference. Definitely something you feel when you're at the pump. Let's talk about car prices, Justin, because car prices are way up as well, nearing $50,000 on average for a new car, pricing a lot of Americans out of buying a new car. What's the driver here? Because prices have been rising for several years now.
It's an interesting point. I'll tell you what's really driving demand. Two main factors. Number one, those tax refunds on average are larger for most Americans, and those tax refund dollars are starting to hit mailboxes. And in America, we love our cars, and you get a little extra jingle in your pocket, and you're like, hey, honey, let's go upgrade the SUV or what have you. There's another big driver, y'all, to what's going on with automobile demand, right? Prices rise if there's more demand. And there's immense demand for the latest, say, 2 or 3 model years. So anything sort of 22, 3, 4, 5, because what's happening is the tech really took a jump in improvement in our vehicles in about 2022 vehicles and newer. And here's what's so interesting we know when we look through surveys. It used to be not that long ago that it was the performance of the vehicle that would really drive if that was a popular vehicle. What was the 0 to 60? What was the quality of the leather or the quality of the speakers? You know what everybody asks now first? They say, what's the quality of the tech? What's the size of the screen? Does it have the latest CarPlay? Does it have the latest Bluetooth? Everybody is buying the latest and greatest technology, and you can only get that if you're buying a car that's either new or a max 3 years old.
Right, everyone wants a smart car nowadays. I want to ask you about this, Justin, because due to rising inflation, the University of Michigan put out a survey on consumer sentiment, and it has it falling to a record low, lower than anything post-World War II. Now, that means the Great Depression, the Great Recession, the pandemic, which was a shock to me. Can these numbers rebound when the war ends, and will they?
You mentioned this decline, a decline of 11%, and you say that's the most precipitous decline since the survey got started. I would say this, of course, I don't have a crystal ball, but I think because people were feeling so good relatively, and our labor market has been relatively resilient, I do believe that once this conflict in Iran subsides, you're going to see oil prices drop dramatically, which means the gasoline prices around America and the world will drop dramatically. I mean, we're at $110 a barrel for oil right now. We were at about $65 a barrel for oil before the conflict got started in late February. So if you just follow that logic, I do think it's a fairly safe assumption that oil prices will immediately come back down. Stock market will immediately go back up. People can exhale. They'll be able to save another 25% at the pump. And maybe, if we're fortunate, we kind of go back to feeling pretty good about the U.S. economy. I think it is worth noting, though, Robert, that while you're not seeing mass layoffs, you are seeing layoffs in some sectors. And when people hear about layoffs, mostly due to AI efficiencies, it makes you a little more insecure about work. There has certainly, this is not the America that we had right out of COVID, where it was the worker who more had the leverage over the employer. That paradigm has shifted. It's a little more in the favor of the employer right now.
All right, Justin Farmer, we'll have to leave it there, co-founder and CEO of Exit Wealth Advisors. Thank you for your perspective. We appreciate it.
Take care.